taking you higher. It's Wednesday, so it's time to make some money. Time for our feature called Mickle Mek A Muckle. 8 minutes past 8, and this feature is brought to you by BPM Financial. Taking you higher in this life. God, this a thing, a feature Miss Venice, as I would say. No lazy money, no lazy money, we don't know lazy money.
Lazy money, no lazy money, no lazy money. BPM, we make your money healthy. Turn your money, you have to turn your money. Lazy money, we don't want no lazy money. Lazy money, we don't want no lazy money. If your money is small, it's gonna get dull. Your money is small, it's gonna get dull.
Man say fi link Miss Venice anytime. What the man say?
Link Miss Venice so your money can free.
Come and say good morning, Miss Venice. I say morning. I man say good morning, Miss Venice. I say morning. I miss the time for rocket on the Wednesday morning. Come me say you not hear the poor people them calling and say they not invest so right, no things stalling. So me I call you Miss Venice for Wednesday morning. Good morning, Miss Venice. Forward in. Forward in. How you doing, Miss Venice, and everybody at BPM Financial? How everybody safe?
We're doing good. It's safe and
okay. All right, make sure somebody hear you clearly and you come in from the speaker. Yeah.
Yeah, you're good.
Yes, man. May I hear you now, man. So everybody go to DP. You're not close to no deep cleaning, right? Give thanks.
No, not at all. Not at all. You can very well.
All right, Miss Venice, sound like she's moving, okay? This lady is a mover and a shake, kind of. Move, not you, Miss Venice?
I'm not moving right now.
All right, let me make sure so we tune you proper.
I'm talking to you from the starting seat, that's all.
Say that again.
I'm just talking to you from my sardine tin.
Oh, from sardine tin. Oh, you're coming live from the sardine tin. I had no idea. You had one of those. All right, let's see if we can tune you up better now and thing, and you come a little closer and
all right.
fix up your tin. Let me hear you go with the tin now.
Yes. Tell me if you hear me better.
Yes, man. Me I tell you, say them sardine tin nowadays, man. Them tin you build out of some lightweight material. All right, so let's go. Every Mickle Mek A Muckle is 10 past the hour. So tell us what's going on today, Wednesday, the 24th.
Well, what I'm going, we're going to tell you 6 different ways to protect your investment. Only 6 different ways.
6 different ways. We're ready, we like
Yes,
Freddie.
man. Quick and easy. Number 1,
That's the funny yang yang.
Diversify. And diversification. Now, after the stock market crash in 2008, and the recession and the ongoing pandemic, and it goes on, then we should know that various asset classes react differently to events, and investing in a combination over the long term is by far the most sensible approach. What we really mean and why? Now, a diversified portfolio run has a combination of assets such as shares, equity, yes, same thing, bonds, government paper instruments, properties, commodities, local stocks, overseas stocks, US dollars. That's the diversification.
It's like you're at a supermarket and you push a trolley. You have a little milk, your chicken, your little this, a little that.
Yeah, man.
You diversify.
Yes, you're diversified. So it's either managed directly by you or within a fund such as BPM Financial Limited, because we're fund managers. We do that and we do it very well. And we're going to show you by using the 6 different ways how we protect your investment and how you can do the same for yourself. So we manage your portfolio. It will protect you entirely from market fails in uncertain times. It will not protect you. That's what we're saying. It will not protect you entirely from market fails in uncertain times unless you are extremely lucky. However, a diversified managed fund will deliver a more stable return over time that is geared towards beating inflation. So diversification is key. It will not protect you from losses entirely, but we're saying over time it will protect you. It will give you the return that you're looking for, a more stable return, and it will also beat inflation. Now, BPM's portfolio has a decent mix of shares in large and small companies, local and overseas, across a broad range of sectors. And investing across multiple geographics will help soften the blow from region-specific economic threats. So it means that well diversified. We have been diversified. Basically, we have over 14 local companies and over 10 overseas companies. US dollars in the mix. Government paper in cement. Good.
Number 2.
Number 2, take advice when you need it. Take it. We have a lot of advice to give you. BPM advisors will help you match your goals to the right portfolio mix based on risk. Risk and returns go hand in hand. The higher the risk, the higher the returns, and the longer time you need to spend. Now we take the emotion out of money management for alarmed investors by making the right decision as to when to sell and when to hold investments and when rebalancing or a change of strategy is warranted and how to go about it. So we are telling you that we have the information, we have the right mix. So take advice.
Number 3.
Yes. Number 3, clarify your attitude towards risk. Is it little and no risk, moderate risk, aggressive risk? Now, a lot of people want the high returns without risk. It don't work. One of the key functions of our financial advisor is to help you understand your appetite for risk. Your attitude to risk may seem high when markets are performing well, and we see a lot of that. Yes, man, the market doing well, throw in the box. Yes, let's do this. But many people discover in times of volatility, like now, that they are less comfortable with the fluctuations of the market than they expect. And guess what they do, Ron?
Pull out the money and run, gone.
They never expect it.
Yeah, so then pull out the money and they tell them
it will go up and down. You will make losses and gains over time.
No, they say, oh, I'm going to make no money for my money. Give me back
and
money.
No, it's not a good time to come out of the market. Anyway, it is an opportune time to get into the market when it is low.
Now, smooth sea never make a great sailor. Number 4.
Number 4, rebalance, but only when necessary. What you could possibly mean by rebalancing? Rebalancing simply involves selling assets in areas where you have ended up with too much and buying more in areas where you have too little. That means if you only have a stock portfolio, only equities, only high-risk investment, you need to rebalance the thing because you need to ensure rebalancing can ensure that you are not taking on a level of risk that you have not planned on by exposing too much of your portfolio to a single asset sector or geographical area. Do not be tempted into simply selling. So it simply means that if you have too much of any one asset class, is a risk. So if you have all equities, high risk, then that is going to be a problem. If you have only investments in US dollars, then it might pose a problem as well. So you need to diversify, as what we said in the beginning, in short-term, medium-term, and long-term, right? Or you need to have little and no risk. That's your short-term plan. Yes, moderate risk and a more aggressive risk. So we help you to clarify your attitude towards risk. It's very important. So rebalancing is very important and necessary. But when after a while you realize that you have too much in one area. Number 5. What? Is just invest regularly. We have been telling you over and over, invest regularly. Invest with what you have. Small sums matter. Every Mickle Mek A Muckle.